A lot of people are lamenting about SCHG's performance or its lagging performance, especially last year was lagging quite a bit, and they're chasing after higher yielding stuff. But I think SCHE has a place in your portfolio because it's a bit more conservative in its holdings, and the dividend yield's not bad. And the other thing I'm going to point out is how you can trade it too here in a second. But let's look at some key metrics on it. It's got really decent volume. Look at that, over 20 million shares traded in a day. That's excellent liquidity if you want to trade it. So you could even swing trade this or do options, which I'm going to allude to later. The 52-week low on this was 23.87. You have a yield that's around 3.8%. The 52-week high on it was at 28.84, so it's currently trading around the $27 mark. I like to do options on it when it hits the lower end of that range around 27 flat. I'll start looking to do puts. You see the assets under management, 73 billion. That's really stellar, guys. Anyway, this is some of the holdings, the top 10 holdings. They weigh it down by about 41, 42% roughly. You got Merck in there, Amgen, Bristol Myers, Cisco, AbbVie, Coca-Cola, Pepsi, Conoco, Phillips, Lockheed, Chevron. So really decent companies overall, and they'll pay dividends. Now, I like the optionality of it, just going out basically a month out. You can sell calls on this at a 27.5 strike at $40 and on the last. It was down a little bit, so you can see it dropped 16%. So to me, people are missing the point. It trades kind of flat, right? It's a perfect time to start selling puts and doing the will on this. If you get a sign, start selling calls on it, and just wait for green days to sell calls and collect that 3.8% dividend yield. If you're holding bag holding for a little bit, I'm not afraid to average down SCHD at all. So looking at the put side of it, it's not a lot of income, but if you don't get a sign, it's free money. If you do get a sign, you get a discount on the share price, and you're getting paid a dividend, and then you can go ahead and will it on green days, selling covered calls when it's topping out in the upper range. I'd say around 28 maybe. But anyway, if you look at the annual returns for SCHD going back in history, it's done pretty stellar. It's had some drawdowns, like in 2022, it was overall for the year down 3%. 2018 was down over 5%. It's one of the biggest yearly drawdowns, but overall, this performance has been really great, pretty decent. And you can see that total return chart on it. If you count dividends and all the rest, you can see it's exponentially going up to the upside. Now, an overall return since inception in 2011 is over 417%. So your exponential trend line means you've been gaining 12% a year on that on an average basis. A growth of 10K at inception in 2011 would now be worth 51,000 bucks. It's $51,742. So not too shabby, to be perfectly honest. And it's a fund that I like to trade during down days, like severely down to like the lower end of 27. If you look at the crashes and the max drawdowns, in COVID-19, it fell 33%. So you got to keep in mind you could get a discount on it. Most of the time, though, if you look at it, it's well under 20%. Now, the S&P, can fall a lot further, and definitely the NASDAQ. So this is a little barometer for more stability compared to the other indexes during pullbacks and corrections. You can see the drawdowns aren't nearly as severe as what you get in something like a SPY or maybe the triple Q. So that's why I like to trade it. I'm going to plan on trading in the future whenever it gets down the lower end of 27 flat, maybe sell puts at a 27 strike. If I get a sign, start selling call options on green days. All right, guys, just a thought, not advice, just something I'm looking at for a little diversity in the portfolio. All right, guys, take care. Bye.